Hello everyone, in this video we will be doing the chapter 14 control account reconciliation of ACCA F3 financial accounting. Before watching this video, make sure that you watch the previous chapters, and if you haven't, check the description box below. I have linked all the playlists. In case you would like to solve the Kaplan exam kit, I have linked the playlist to that as well. Also, before starting this video, make sure that you have a notebook with you, a pen and a calculator. You need to note down the formats and you need to solve the questions along with me. Otherwise, there is no point of watching this video. Okay, so let's start. We are going to learn about the control account reconciliations. So what do you understand by the word reconciliations? That is basically checking the values and checking it and proofreading it. So basically we are proofreading what we have done so far, and we are going to check for any errors, and we will basically try to figure that out. So what do you understand by control account? So control account is where we are basically going to align the individual ledger values with the cumulative ledger value. For example, I'll tell you, X is my debtor, Y is also my debtor, Z is also my debtor. X has to pay me $100, Y has to pay me 100, and Z has to pay me $20. Now these are the individual journal entries. These are the individual ledger accounts. I have something called as the receivables control account. What is this receivables control account? This basically has the total, which is 220. So what is receivables control account? It has the cumulative value of the entire number of debtors. So that is what are the control accounts. So we all know what an individual ledger account is. That's what we've been doing so far. So in this chapter we will be doing the control account. So the receivable control accounts have the cumulative of the receivables, and the payables ledger account has the cumulative of the payables account. Okay. Now, what do you understand by memorandum account? So whenever we are going to talk about the memorandum account, we are talking about the general memorandum or the individual ledger accounts. So whenever we are going to be talking about memorandum, we are talking about the individual ledger accounts. And whenever we are talking about the control account, these are the cumulative ledger accounts, or these are the control accounts. Okay. So now, tell me something. Whenever we used to write a journal entry for receivables, what was the journal entry for? Receivables. What are receivables? We have done this in the receivables chapter. What is the balance of receivables? Receivables are an asset to the business, so the balance is debit. Receivables has a debit balance, right? So in case receivables increase, our asset increases, and if the receivables decrease, our assets decrease, right? And when we talk about payables, what is payables? What is the balance of payables? It is a it has a credit balance, and it is a liability, which means we are owing someone the money, right? So if my payables increase, my liability increases. If my payable decreases, my liability also decreases. That is what is the payables, right? Now, tell me something. Whenever we used to write journal entries, what was the journal entry? Okay, whenever we had to do cash sales, tell me this. Whenever we had to make a cash sales, what was the journal entry? Debit cash and credit sales. Cash is getting debited because cash is being received, and sales credit, right? Now, if this was a credit sales, what is the journal entry of a credit sales? Give me a second, my pen is not working. Yeah. It's receivables to sales. You know that. What was the journal entry of credit sales? It was receivables to sales. This is the individual journal entry. This is the individual ledger for us. We know this. So it's the same thing. Whenever you are passing the journal entry for a cumulative control account, it will just be receivables control account debit. Okay. And what about credit purchases? Now I think you can do it by yourself. What is the journal entry of credit purchases? It is just like how you make a credit purchase entry of a payables, right? How you do that, how you make for payables, the same way you need to make it. So what will the journal entry be? It is going to be debit purchases. So if it was a cash purchase, it would have been it would have been debit purchase, credit cash, right? If it was a credit purchase, it would be debit purchase, credit payables. So now we are doing the control account. It would be credit payables control account or payables control ledger account. Okay. So these are the journal entries. So that is what they are discussing. Receivables ledger account debit, credit sales. That's what we've discussed. Purchases and credit and payables debit. Okay. At the same time, the most business entities will maintain what is referred to as a memorandum. So memorandum is a separate list of individual receivable and payables. These are the individual accounts we have talked about. So when we are going to see the difference between the individual accounts and the control accounts, when we check both of them together, this process is known as the control account reconciliation. Okay, now this receivables ledger control account and payables ledger control account is very easy. I will explain it to you all. Since we have already discussed what was receivables, it is an asset and the balance is debit. We have already discussed this. If the balance is debit, what does that mean? That means that the debit side is whenever the receivables increase and the credit side is whenever the receivables decrease. What do you mean? Whenever my receivables is increasing, it will get debited. Whenever my receivables are decreasing, it will get credited. No doubt in that. Now why are we doing that? We are doing that because receivables is an asset and the balance is debit. Now, what about payables? What will you do in payables? What is the balance of payables? The balance of payables is credit. What does that mean? That means that whenever my payables are increasing, it will get credited, and whenever my payables are decreasing, it will get debited. Right? Why? Because the balance of the payables is credit. We know this also. Okay, so this is very simple. So now we know what the balances are. We know that receivables have a debit balance because it is an asset, and the payables have a credit balance because it is a liability. So whatever is going to come on the left side, that will be increasing the receivables, and whenever you want to decrease the receivables, you will have to credit it. And it's the opposite for payables. Whenever you want to increase the payables, you will credit it. Whenever you want to decrease the payables, you will debit it. Right? You know that. Now, let's say I have done a credit purchase. I made a credit purchase. What will my credit purchase journal entry be? Tell me. It's a credit purchase. Okay, this is how you'll do. Debit purchase, credit payables control ledger account. What does that mean? Payables is getting debited or credited? Payables is getting credited. Why is it getting credited? Because whenever I am purchasing something, my payables are increasing, which means it should go on the credit side, because the balance of payables is credit. And the same way, when we are talking about receivables, what happens? If I've given a credit sale, what will it be? what is the journal entry gonna be for that? It is gonna be debit receivables account, ledger account, and credit sales. So since my receivables are increasing, it will come on the debit side, right? Okay, so now let's see the ledger accounts. It's very easy. So this is the receivables ledger control account. We have already discussed that the balance of receivables ledger account is debit, and whenever it increases we are going to debit it, and whenever it is going to decrease we are going to credit it. So whatever balance we have, this is the balance we have. Since receivables is an asset, so my balance will always be a debit balance. Sometimes it might be a credit balance. So when we used to do the sometimes we used to have a credit balance in the cash. What was that? In the bank. That used to be bank overdraft. So sometimes we might have a credit balance as well. We will do it in the question. So usually it is going to be a debit balance. Why? Because the receivables have a debit balance. Okay. So whatever is going to come this side will always be debiting the receivables ledger account, which means whatever is going to come here will always increase my receivables. Since it is increasing my receivables, that's why it's coming on the debit side. And if my receivables is getting credited, which means all of these are basically something which are decreasing my receivables. No doubt in that. Understood what I just said? So let's discuss credit sales. When I am doing credit sales, think about it logically. When I am doing credit sales, what happens? My receivables increase or decrease? If I am making a credit sale, my receivables increase. That's why we put it on the debit side. SDB is just the sales day book. Don't worry, it's the cumulative value. We are talking about the cumulative value of the sales day book, right? Okay. Next we have bank dishonored checks. What do you understand by dishonored checks? Okay, let's first discuss that. What do you understand by dishonored checks? Okay. So when we are talking about dishonored checks, what does that mean? Let's say there was a guy and there was a guy, okay, and this is me. Give me a second. This is me, and I gave him a credit sale. I gave him a credit sale. So after few days, this guy came to me and he gave me a check. And I became very happy that he gave me the check, and I went to the bank to deposit the check. Okay, so he gave me the check. So I go to the of let's say $10. He finally made the payment. So one of my receivables finally made his payment. I became happy seeing the check and I took it to the bank. So I went to the bank and I deposited the $10 check in the bank. And then I went home, and in my books I was having a $10 receivable, right, in my book. Someone has a due payment. Someone had to pay me the $10 that was written in my book. I go home and I erase this. Why? I reduce my receivables because the $10 which was due has now been received. The guy has made his payment. So now the receivable has been done. So now no more due payments, no more due receipts are left, right? So I removed the receivables from my books. Now today I got a notification from the bank that the check has been dishonored. That means that this money of $10 whatever hasn't been credited in my account. So now I became sad because this $10 has not been credited in my bank, but I had already erased it in my books because I assumed that the money will be credited into my bank. So in such a situation, that person, my receivables, that guy's, because of his bank mistake or whatever, the money has not been received in my end. Does that mean that he gets to go away with it? Does that mean that he doesn't have to pay you anymore? That's not true. Now he becomes my receivable again, right? He becomes my debtor again, and he has to pay for it now. He will have to pay for it, so my receivables will increase again, right? Since my receivables will increase again, that is why it is coming on this side, because receivables are increasing. Okay. Okay, this refunds of credit balance, let's come back to this, give me a while. Okay, now let's talk about what interest charged is, and why is interest charged increasing my receivables. Whenever someone takes something on credit, then I will charge an interest on it. I will charge more money on it. Since I'm charging interest on it, interest is also something they have to pay. They have to pay the principal amount. Along with that, they will also have to pay the interest. So that is also something which I'm gonna receive. So that will also increase my receivables, right? See, this is very logical. Okay. Now the same way, let's see the credit side. What happens in the credit side? So whenever my receivables are decreasing, all that will come in the credit side. So this is the balance PF on the credit side. Whenever there's a negative balance, it will come under the credit side. Okay. When we talk about sales return, this is sales return daybook in the bracket. What is sales return? I made a sales, right? Which means my receivables increased. I made a sales, so someone will have to pay for me. The person who took the sale from me, they will have to pay for me. So my receivables have increased. This person gave me back my goods. He returned back my goods. Will he still pay me? Will I still receive money from him? I will not receive money from him because he has returned the sales. So my receivables will reduce in such a situation. That is why we are putting it on the credit side. Bank. Now what is bank? What was the journal entry? In general, what was the sales journal entry? Debit receivables, credit sales, right? After few days on the due date, when they pay, what is the journal entry? Debit cash or bank, and credit receivables. Why do we do this? Because now they have made the payment, right? This. So what do we do when we receive the payment? We credit the receivables and we close this account. Why do we close the receivables account? Because now we have received the money, right? So the same way, that is the reason why we have put bank in the credit side, because now we are receiving the money from the receivables. So we are reducing the receivables because we are closing their accounts because we have received the money. Okay. Now, irrecoverable debts. You all remember what irrecoverable debts are. We've done in the previous chapter. So, whenever we open a bad debts account or we have some irrecoverable debts, we close the receivables, we close their accounts, we reduce the receivables because now we assume that we will never be receiving their money ever again. So, we just close off their accounts. You remember that? Which means the receivables are reducing. They became bad debts. So, which means I won't be receiving them anymore. So since it is also reducing, that also comes on the credit side. Discount allowed. What is discount allowed? If I am giving you discount, that means it is kind of a loss to me. You will not be paying that amount anymore. If I wouldn't have given you the discount, that part of that amount of the sale will also be my receivable. But since that is my discount, I will not receive that part of money from you, which means I am reducing my receivables by giving you a discount. It is a good thing for you, but for me it's a bad thing. I am the one giving you the discount. So since that is also reducing the receivables, so we put it down in the credit side. What is contra? Now contra is also something we will discuss in a bit. Okay, we will come back to the contra and we will also come back to the refund of credit balance. So I hope you're understanding the concept. Okay, in the same way we are going to do the purchases ledger control account. Since the balance of purchase is credit, so whenever payables increase, it's going to be credited. Whenever the payables decrease, it is going to be debited, and the balance will always be credit. And sometimes when you have a negative balance, it will be debit. Okay, so now let's see what are the things which will basically increase the payables balance. We have a balance PF, we have a credit purchases. So whenever you purchase something, what happens? What's the journal entry when purchases take place, when credit purchases take place? Tell me. What happens when you purchase something? Purchases account gets debited and you credit the payables amount. So payables will get credited, obviously, right? Whenever I'm purchasing something, my payables increase, so I'm putting it down in the credit side. So you don't have to think anything. You just have to see, will this journal entry or will this treatment increase my payables or decrease my payables? If it will increase my payables, I will credit it. If it will decrease my payables, I will debit it. That's literally all you need to think about. Okay. Refund of debit balance, we'll come to that. Okay. Interest. Now, what is interest? When I am purchasing something on credit, I'll have to pay the interest. So when I have to pay interest, it will increase my payables. So I'm putting it here. Check dishonored. The same way we have discussed in the previous question. This time, when I have given someone the check, when I have paid my payables, when I have paid my creditors, and when I have given my check to them and it gets dishonored, that means my payables will get increased again, right? So these are the things whichever will be coming in the credit side because it will increase my payables ledger control account. Now let's see the debit side, bank. So what is bank? Whenever I'm paying off, whenever I'm paying away my payables, the money will go out from my bank, right? Money will go out from my bank, payables gets debited. So this is when the payment has been made. Purchase return. Okay, obviously. So when I have purchased something from someone, my payables increase, but if I'm returning their purchases back to them, my payables decrease. Discount received. If someone has given me a discount, so my payables will reduce, right? Contra, we will come to that. So this is the payables ledger control account. So I hope you've understood the whole thing, right? Okay. Now I hope you have done the recording transactions chapter well. So when I talk about this side, this will always be a debit balance, this will be a credit balance. You are never supposed to see the balance CF and say that this is debit balance, this is credit balance. That is not how you check a balance. You have to do the totaling and finish the balance, and you have to get the balance to the other side, and then you can say that this is basically a credit balance and this is basically a debit balance. So after transferring it to the other side, only then you can tell whether a balance is a credit balance or a debit balance. Okay, I hope you got it. Okay, so now let's talk about what contra entry really is. Now, what is contra entry? Let's come to that. Okay, so now we have something called as contra entry. So contra entry is basically like a double effect or something like that. So let's assume that I am A. Okay, this is me and I am A, and this is B. Okay, so now I purchased this from B for, let's say, $100, and B purchased this from me for, let's say, $20. Okay, so I purchased from B $100 something, and B purchased something for $20 from me. So which means A has to pay $100 to B and B has to pay $20 to A. Right, now tell me something. Instead of this, A can just directly pay 80. Right, A can pay 80 only and close his account. Why does he have to pay full 100 and again B will return the rest 20? Instead of that, A can straightly just pay the 80, which is the balance which he has to pay. 20 has already been settled and he'll just pay the balance amount. Right, this is what is known as a contra entry. When your payables and receivables are the same person, you can do the balancing and you can basically just nullify the effect and close the accounts like that, but by paying the balance. Okay, so now what would be the journal entry of a contra entry account? Think about it. it is going to be nullifying effect. So my payables, what is my payables balance? My payables are a credit balance. So since I have to reduce it or nullify it, I will debit it. And what is the balance of my receivables account? It is debit balance. Since I have to nullify or reduce it, what will I do? I will credit it. So that is the contra entry, journal entry. I hope you're writing this. Okay, debit payables ledger control account, credit receivables ledger control account. So this is what is my contra entry. Okay, now we saw something that credit balances on the receivables ledger account. So this is something which we have discussed, that usually the balance should be debit since the receivables balance is debit, but sometimes we might have a credit balance. Why does that happen? And the same way for payables, sometimes we might have a debit balance. Why does that happen? That is what they are discussing now. So credit balance on the receivables ledger control account. Sometimes the receivables ledger control account may show a credit balance. We owe the customer money. These amounts are usually small and arise when, so sometimes when the customer has overpaid us, we need to return it back to them. So in such a situation it will be debit. In such a situation it will be a credit balance. Credit notes have been issued for fully paid for goods. So when people have paid for it and you have still issued credit notes, payment is received in advance of raising invoices. So these are some situations when such a thing happens. So how do you nullify it? Again, you have to basically just, if you have a credit balance in the receivables, you have to debit it. And if you have a debit balance in a payables, you have to credit it. You have to basically bring it back to its original balance. So since the balance of receivable is debit, you are going to debit it, and since the payables have a credit balance, you will credit it. Okay, so I hope you are clear with the formulas. Let me just quickly take you through a last thing. So now go and see this. Go back to the accounts, and now you can see the contra effect. What is contra? Tell me. We have contra, receivables contra. So you know that you have to nullify it, and to nullify it you are going to reduce it. And if you want to reduce a receivable, you will obviously have to credit it, and that is why you are doing contra with here. And since you have to reduce the payables, you are going to contra here. Okay, I hope you understood the entire thing. Okay, one more thing in the journal entries which we have done. Let me just go back there. Yeah, so we just discussed about what bank refunds of credit balance are. Now this is what we have discussed, that sometime there will be a credit balance. So since we have to nullify it, we are going to debit it and we are going to send it back. This is the journal entry which we saw. And the same way, when my payables are having a debit balance, you would want to return it. You would want to, nullify that also. So you are going to basically refund the debit balance. So since the balance of payables is credit, you are going to show it over here. So it's simple, guys. All you really need to do is see the balance. You know that the balance of receivables is debit, and you know that the balance of the payables is credit. You basically have to see what is increasing the receivables or payables and what is decreasing the receivables and or payables. And the same way, you just have to post the journal entries and just check it. It is that simple. So this is your test understanding 1. We have to make the account. Let's come to that. Okay, so now one thing you need to keep in mind, what we just did was the control accounts. And if you recall, in the starting of the chapter, I told you that we also have something known as the individual ledger account. And what is individual ledger account? It is the memorandum. We discussed that already. It is a memorandum. So what is memorandum? memorandum is basically individual ledger account. So we will always even have a memorandum. So the balance of the memorandum will be given in the questions, and you will have to do the adjustments, whatever the adjustments is, plus, minus, whatever, and the final memorandum balance, you will get a final memorandum balance, and this individual balance should match with the control accounts balance. Okay, so I hope you understood the chapter so far. This is it with all the formats in the chapter, and this is it with all the just a second. Yeah, so these are all the formats, and this is the entire gist of the chapter. In fact, we have done all the formulas now. All we need to do is just we have to solve the questions. So I'm ending this video. This is the part 1 of the chapter. In the next part, we will be doing all the illustrations and all the questions, and we will also be solving the exam kit, and we'll be done with the entire chapter. Thank you.